This is not financial advice. I'm recording my thoughts about zoominfo Technologies. Zoominfo Technologies stock is currently trading at about $24 with a market cap of about $10 billion. Its PE ratio is about 154, so it's definitely an expensive company. But in this video, I'm going to talk about its valuation and see if it is investable at this current $24 price. Zoominfo is a leading go-to market intelligence platform for sales, marketing, operations, and recruiting teams. And they have a platform called RevOS that is going to provide value to their customers. Their clientele includes Waste Management, Deloitte, Vonage, Groupon, Panasonic, etc. And as you can see on my screen, RevOS have reported certain successes because of the use of this Zoominfo's platform. As you can see on the screen, a lot of customers are benefiting from this go-to-market intelligence. So there is definitely value that is provided by Zoominfo. Zoominfo is claiming that their total addressable market is about $100 billion and their net revenue retention rate is about 104%. So we can definitely say their customers like them. Zoominfo does have competition, but their competitors did not grow as fast as Zoominfo did. So we can definitely say Zoominfo has some product differentiation. And let's look at some numbers now. In 2022, they made about $1.1 billion of revenue, and that represents about 47% increase from 2021, which is an impressive growth. When I look into their gross profit, that's close to 85% plus gross margin, right? So that is really impressive. But when I look into their operating expenses, they're very, very high, right? So that is actually hurting their operating income. I can see why their operating expense is really high, because this is a business where you have to do a lot of marketing to promote your product, because this is not a must-have product, right? This is a product that can enhance the performance of a certain company. So for this kind of business, marketing needs to be there, and that's going to add to their operating expenses, right? So I'm not going to get too excited about their gross margins because their operating expenses are going to stay very high. As I said before, they grew their revenue by about 47% from 2021 to 2022, right? But when I look into their guidance for financial year of 2023, they're only guiding for about $1.285 million of revenue, from 1.1 to 1.285. That's not even 20% growth year on year. So the growth has definitely decelerated from 47% to less than 20%. So that is definitely a concern. And with respect to the cash and cash equivalents, they have about $551 million of cash and cash equivalents. So that definitely gives them some runway without diluting the shareholders. When I look into the shares outstanding, they're guiding for about 418 million outstanding shares by the end of 2023. But when I look into the previous year, they only had about 404 million. So that's about 5% dilution there. Now let's look at Zoominfo's evaluation in 2027 to see if it's investable at this current price of $24. I'm going to include 1.28 billion as their revenue for 2023 because they guided for it. And I'm going to estimate a growth rate of 20% for the next 5 years. And that'll give them a $2.7 billion of revenue in 2027. Their gross margins are in the order of 85%, but since their operating expenses are going to stay high, I'm going to assume a net profit margin of 20% for this company, with which they can make about $500 million of net income in 2027. For a company that's growing at 20% year on year and has a net profit margin of 20%, I can assign a multiple of 22.5, with which this company would be worth about $12 billion in 2027. Currently, the outstanding number of shares is about 404 million, but they're saying they can get to 418 million by end of 2023. That's about 5% dilution, right? So I'm going to assume the same 5% dilution for the next 5 years, with which this company will have about 509 million outstanding shares by 2027. And when I divide the market cap of $12 billion with the 509 million outstanding shares, the stock price comes to be about $23. But wait, the stock is already $24, right? That's no gain in 5 years. So $24 is not investable. If we're looking at a 2x, the price has to drop to at least $12, right? When I assume this 20% growth and 20% net profit margin, which I think are reasonable. But I can show you another case where I assume 30% growth year on year, 25% net profit margin, and 25 multiple. Then the stock price would be about $45 in 2027. And current $24 is investable because we're looking at about 2x in 5 years. But the assumption of 30% revenue growth, 25 multiple, and the 25% net profit margin has to hold. Yeah, this company is saying their total addressable market is 100 billion, and when I show a number of 3.7 billion on the screen, it doesn't seem very unreasonable, but since there is competition and their guidance is weak, I cannot be confident about these numbers. So because of this reason, I'm going to wait until ZoomInfo drops below $12 to make an investing decision. Otherwise, I'm going to stay away from this company. If you are a buyer of ZoomInfo at $24, I would love to know your assumptions about the revenue growth rate, multiple, as well as the net profit margin. Please let me know in the comments.